Everyone, and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Today we're seeing a little bit of risk aversion in the markets. We're seeing European equity markets down around 1%, US markets opening in about 20 minutes time, and that's they're currently pointing to around 0.4% lower. Like I say, the theme really today is one of risk aversion. We're seeing the yen performing quite well, up around 1% against the euro, 0.5% against the dollar and the pound. We're seeing the dollar performing well, up around 0.4% as well. I think that's weighing really on commodity markets. Oil pairing its gains. We saw a strong day in the commodities yesterday, so to see them pairing those gains isn't an enormous shock, really. I think the key focus for people today is the fact that is the moves we're seeing in bond markets. Actually, we're seeing yields on European debt and US debt, for that matter, all falling. Now, I think there's a couple of reasons why we're seeing this. One, of course, is we're continuing to see strong monetary stimulus from the European Central Bank. Now, this, of course, is something that's been going on for a while, so it's not just impacting today. If we actually look at European bonds, for example, the bond prices have actually been rising quite consistently over the past couple of months, really over the past few months, quite strongly, and today we're just seeing them continue to push high. And one of the reasons why it's such a big story today is because we're now very near the point at which the German 10-year yield is going to move into negative territory. So that's every German bond now from 10-year lower will all be in negative territory, which is quite a significant thing. It's something we're already seeing in Japanese bonds and others, but the fact that it's now going to Germany as well is very significant. Of course, the ECB begun its bond buying program yesterday, so that could potentially be helping its corporate bond buying program, I should say. So that could potentially be contributing to the moves. But like I say, risk aversion combined with this, I think, is really what's helping to drive bond yields lower today. In terms of market events today, if we take a look at the economic calendar, you can see that. Let me just actually put you on to the calendar here. You can see that we have had some data already, a few notable events here. We've had the CPI data from China. Now, interestingly, the consumer price index actually missed expectations and fell from 2.3% down to 2%. Now, this was largely driven by slower inflation in food prices, particularly pork. There's been suggestions that these inflation in food could actually continue to fall over the course of this year, which is likely to weigh on the CPI reading, which of course therefore opens the door for more stimulus from the People's Bank of China. On the other side of that, we had the PPI, Producer Price Index, actually fall by only 2.8% rather than 3.3% expected and 3.4% previously, and this is really appears to be a result of the rising commodity prices, which we've seen. Of course, the decline in commodity prices really did drive the substantial decline in the PPI data, and given China, of course, is a massive importer of raw materials or commodities, this is having, of course, a big impact on this data. So I expect to see the PPI reading pick up as we move on through the rest of this year, as it has, as we've seen already in recent months. We had trade data from Germany, which showed the trade balance actually rise once again. US data, of course, we've had the jobless claims, which fell to 264,000, another solid figure. ECB President Mario Draghi did speak earlier on today, and a lot of the rhetoric that we had from Draghi was quite consistent with what we've had from him at ECB meetings, really. A lot of talk about how the ECB is doing everything it can to support the euro, but the governments now need to play their part. We need to see them implementing these reforms despite being unpopular, which is what's held them back so far. The ECB said we've created an environment that will allow you to implement these reforms and help the economy return to growth, and they're effectively not doing their part. So strong words towards the European governments from Mario Draghi. We still to come today, we've got a couple of pieces of data, most notably is going to be come from Canada. We've got Bank of Canada Governor Polos speaking later on this afternoon. But other than that, I think the focus is going to remain on these kind of risk-averse markets. You may hear things throughout the day. Of course, we're still going to have the UK referendum, Brexit debate carrying on in the background. So we may hear some stories about that. But all in all, I think we could be in for a relatively quiet end to the trading day in Europe, and a relatively quiet session as well in the US. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.